Now, could you technically go ahead and buy a home without involving the bank whatsoever? The answer is absolutely. And by the way, I do want to clarify something. In this video, I'll give you 4 ways to buy a property without using the bank. But even if you don't have any credit per se, you could walk into a bank and ask for manual underwriting. That's when they look at your credit profile, like your income, if you owe any money, and based on that, they will actually lend you money. So you don't need credit per se to buy a home, but I'm not telling you that if you have terrible credit, like you have 13 bankruptcies and you're like, I don't have any credit, can I get a loan? The answer is probably not. And usually, whenever you're going to borrow money from someone, which in this video you are, just not a bank, guess what? They will care about your capabilities to pay the money back. So they will be looking at your profile as a whole. They want to make sure that you're able to pay. Now, that doesn't mean, for example, you need to have a high credit score or even a credit score, but it does mean, for a fact, you have to have income or money or show that you could actually pay that money back if something goes wrong, or the asset you're buying holds so much value that even if you don't pay, they will still make their money back. So always remember that, okay? Lending is all about the art of, will this person pay me back, or is the collateral going to be enough to pay me back plus the risk I'm actually taking? That's the idea. Now, as always, guys, if you guys are new here, subscribe, hit the bell, notify, because I have more videos coming out every single week on real estate and everything else, okay, guys? So the first thing is gonna be this, guys, okay? How do you go ahead and borrow money without using a bank to buy real estate? Well, option number 1 is going to be private money. A private party can actually lend you the money. Guess what? Banks are not the only lenders out there. There are actually private parties, private companies that actually lend money. Now, if you want a full video on different parties, who they are, but for the most part, you can Google these people, okay? Not the people, but the actual companies. But you also have people. Let's say you have an aunt and she has money and she's willing to actually lend you the money. She can write you a loan agreement or a promissory note and basically lend you the money to actually buy that property. Now, usually, 2 things happen here. Whenever you're borrowing private money, you cannot expect the same terms as a conglomerate like Chase Bank or BOA or Wells Fargo. They have a lot of money, right? So it's different. They have different terms. But private lenders, usually their terms are going to be more inclined towards them making a profit. So the idea is you might see higher interest rates. You might see, for example, balloon payments in there. So the idea is you want to negotiate with them and make sure the terms are in line with what you actually can afford to pay and everything else, okay, guys? So if you have a high interest rate, you can't afford it, don't get into it. If there's a balloon payment in there, hey, you got to pay me back whenever I say, don't get into it, right? So all those factors matter a ton. But it's not to say, for example, if you found a property right now selling for $100,000 and you know that after repair value of this property is going to be like, for example, $150K, well, you can say, I'm going to borrow this money and I'm gonna repair this property, refinance with the bank, and then basically pay back the private lender and then just basically go with the bank. That's also possible. If you find a good opportunity, then you take full advantage of it. You know, a lot of times flippers, they're not going to banks, they're going to private lenders, okay? This way you can basically get the deals done faster, they have more relationship, and it's easier to actually do. Because again, it's private money, they understand it, and not basically just have a whole bunch of red tape everywhere to worry about things, okay? Because banks do have a lot of red tape, by the way. Now, number 2, guys, is going to be owner financing. Now, this year, I actually sold my personal property. But when I was actually selling this property, because it was basically paid off in cash, I had family ask me, tell me, could you actually finance this property for me? It was one of my aunts per se, and she had, for example, $70,000 in cash, but she could not get a mortgage because basically she was all mortgaged out. She had a lot of property, and in reality, she had some issues with her credit, but I knew she was probably gonna be good for the money. But her idea was, I wanna basically give you $70K as a down payment. I wanna use the property for Airbnb. I wanna pay you what it makes, and on top of that, I don't wanna pay you any interest, you know? Now, because I am the owner of the property, because it is my money, I could basically negotiate whatever terms I want. I'm not a bank. So that's one of the benefits. But another benefit is basically because I am the owner, I can negotiate my terms. which for the buyer is not really that much of an advantage per se. But I can see someone that doesn't have, for example, perfect credit and say, I will give you a loan agreement for this property. If you don't pay me, I get it back. You lose everything you basically put into it. That's also possible too, okay? You can negotiate it however you actually want to negotiate it. Now, in the end, I did not end up doing that with my aunt because in reality, I wanted to sell the property and I wanted to get all the money at once, and I didn't want to worry about anything actually happening with Airbnb and so on. And on top of that, if I was going to do that deal, I wanted to get paid interest, obviously, because hey, what's the point of doing this deal if I'm not going to get any interest out of it? And by the way, I wanted to charge around like 8% interest, but she wasn't interested in that, okay? She wanted it for free, and that's why it did not happen. Now, number 3 is you could always pay in cash. Now, most people don't have $200,000, 300, 400, 500, $1 million lying around to actually pay for a property in cash, but it's not like it's impossible. It depends on the area you want to buy. You know, in some areas, a house is like $300,000. In some areas, it's like $50,000, okay? So it's all about the different areas you're actually going to be looking at. And if the property is for like investment purposes, then you have a lot more options per se, because it's not based on where you want to live, although it's a lot more beneficial to buy rental property around your area where you actually live, where you know the neighborhood, where you're able to just basically drive there in case anything happens to it, right? But that's also a possibility to invest out of state. So paying cash is an option. You do have to save a lot of money. You have to be consistent, and it takes a lot of time. But in the end, there is one big benefit that when you pay all cash for a property, that property is fully yours. You don't have to worry about a mortgage. And if it is your personal property, you know it's yours. Your cost of living goes down dramatically. And if it's not yours and you're going to be renting it, for example, I mean, not yours in the sense of like you're not going to live in it. If you're going to be renting it, you know that all the cash flow that comes in is going to be yours after expenses, and you don't have to worry about paying a mortgage for like 30 years or 15 years or whatever. So that is a big pro, but it does take work to actually save up that much money. And you could always leverage your stocks to actually do it if it's like non-retirement accounts, but I'll talk about that in another video. Now, the last way to actually buy a property without a bank is to actually rent to own. You know, if you have a party like me, for example, and I tell you, hey, I'm willing to actually let you live in the house, you can rent it, and a portion of what you pay is going to go towards building a down payment. But if you decide to not buy the property, you can lose that. On top of that, everything associated with this deal is going to be towards my benefit, right? Because I am the one selling it to you and you're the one renting it. And it could be like, for example, a really expensive way to actually buy a property. So it's something you actually want to analyze. It's not something I actually recommend whatsoever. Rent to own is not recommendable because in reality, the seller has so much power here, and they will basically design the deal to basically eat you up alive, right? Not necessarily per se like that, you know, but it is going to be a lot more beneficial for them. You could run the risk of actually losing the money you actually put into it because you won't buy the property, or you could get stuck buying a property for a price is actually higher than the market value when you actually end up having to buy it, right? So all these are factors, but the overall core is you could rent a property with a contract to eventually own it and actually buy it for a certain amount of money. That's actually possible, and you don't have to involve a bank, but it usually has to be a property that is being sold by an owner, right? So that's the idea right there. But guys, thanks for watching this video. These are 4 ways to actually buy a property without involving the bank. But most of the time, you do want to involve a bank if you have the ability. If you have no credit, you can still involve a bank via getting manual underwriting. If you have terrible credit, right, then I get the reason why you can't involve a bank, but then also understand that private lenders or people that are actually gonna get you a contract for the home, like these people are also going to be worried about you as a person, if you can actually pay. But if it's something like back in your history, for example, you had like a bankruptcy like 30 years ago, 20 years ago, 15 years ago, but now you have, for example, stable income for like the past 10, 5, 3 years or whatever the criteria is, these people can decide. And that's the cool thing, right? That they can basically decide based on their own criteria. And it's not basically a bank where everything is like, hey, red tape, we can't get beyond this. I'm sorry. And by the way, you could always use a broker because brokers do find you good deals out there, and their job is to basically find you the way to get the money, all right? That's the idea. Guys, thanks for watching this video. If you made it all the way to the end of the video, comment down below bank. So I know you made it all the way to the end. As always, up here is another video. Over here is my face. Subscribe. And as always, long-term team officially out.